This is the Build Wealth Canada podcast, episode number 82.
Welcome to the Build Wealth Canada podcast, where it's all about becoming debt-free, accelerating your wealth, and taking control of your money. Now, here's your host, Cornell Schreiber.
Hey, it's Cornell and welcome to the Build Wealth Canada show. If you're working with a good certified financial planner here in Canada, CFP, there are specific categories that they should be helping you optimize. And according to FP Canada, which is the organization that issues the certified financial planning designation, the CFP, there are 6 areas that should be covered as they are critical to your financial health. And one of these is insurance and risk management, which is what we'll cover today. And just for your reference, the other pillars are financial management, investment planning, tax planning, retirement planning, and estate planning and legal aspects. So keep those in mind if you are ever working with someone calling themselves a financial planner, as they should touch on each of those pillars. And what I and other experts that I've interviewed found is that often if someone calls themselves a financial planner, but only talks to you about one of these pillars, and usually it's just the investing piece that they talk about, then there is a good chance that their main goal is to sell you some kind of investments because that's how they make their money. A lot of the time, there are commissions involved or their performance is evaluated based on how many investments they sell you, as opposed to them being focused on doing a holistic financial plan with you that covers each of those pillars. So today, we're going to talk about the insurance and risk management pillar to help you optimize that. And my returning guest today is insurance expert Laura McKay. Laura used to work as an actuary and is now the co-founder of PolicyMe. And one of the things that I really like about PolicyMe is that they have an incredibly useful tool on their site to help you determine how much, if any, life insurance you actually need. And what I found really sets it apart from the other online calculators that I've seen is that it will actually honestly tell you if you do not need life insurance. And this is huge, as many of the other tools that I've used online will almost always tell you that yes, you do need life insurance because they're trying to make money off you by selling you a policy, and hopefully, the biggest policy they can because that's how they make more money. So the calculations in a lot of these other calculators that I've seen are basically designed around that, making sort of everybody think that they need a big policy and that they definitely do need life insurance no matter what. But on the flip side, when I used the PolicyMe tool myself recently, it actually told me that I do not need life insurance, which is huge, as they could have easily just modified the tool to make it look like I always need insurance. And what was really neat is that the tool was very transparent about everything. So in my case, it actually told me why I do not need it. And if I did need it, I'm sure it would actually tell me why as well. So, my hat goes off to PolicyMe for actually building a really useful tool that isn't built just to sell me as big of a life insurance policy as possible. So definitely check it out. You can use it for free. I made a quick, easy to remember link that will take you there. And that link is buildwealthcanada.ca/PolicyMe. All one word. So just buildwealthcanada.ca/PolicyMe. And when you get there, click on the Get Started blue button. And after you answer a few questions, the tool will let you adjust how much coverage you want. But underneath that, you'll see a section called Unsure How Much Coverage You Need, ? Click on the link there, and that will let you take the quiz to help you determine whether you and your family actually need life insurance. So again, in case you missed it, the link is buildwealthcanada.ca/PolicyMe. And that's not an affiliate link or anything like that. And as a side note, when I was researching them, what's really impressive is that they actually got a score of 4.83 out of 5 based on 523 reviews on reviews.io. So 97% of their reviewers actually recommend them. So, really impressive for sure. And again, my hat goes off to them for what they've built. And now let's get into the interview with Laura, where we can cover some of the best practices when it comes to insurance and risk management. All right, Laura, welcome to the show.
Thanks so much for having me. I'm excited for today.
It's really nice to have you back. The last episode did really well. A lot of people were really interested, and you shared a lot of knowledge and research that you guys have done at your company with your team. So it's great to have you back and learn even more, especially now we're in these obviously very different times with COVID and things are changing. And I know you guys have changed a lot too. So I think it's really great to do an update as people get their finances in order. So I mean, as the new year kicks off and we look for ways to optimize our finances, one important area when it comes to our financial health is insurance coverage and risk management. And a big piece of this has to do with life insurance. Now, in case somebody is on the fence or not really motivated to look into life insurance, can you tell us why this is something that should be on the radar? And what are the consequences of not having this type of insurance when we need it?
Yeah, so life insurance, I want to start by saying that life insurance isn't for everyone. I think people get tired by that kind of notion or that sense that they're just being sold something that they may not need because everyone just is told they need life insurance. It's definitely not something that every Canadian needs. The people who are most susceptible to kind of the trade-offs of not having life insurance if they were to pass away are people who have loved ones who depend on them financially. So when we're thinking about common kind of personas that would fit under, it's anyone who has a partner and maybe just recently bought a house, so has a large kind of mortgage that their partner may not be able to afford if their income were no longer there to support them. Or another really common kind of group of people that really we focus on as a company is parents. So typically you have young kids as they grow up, they become more financially independent, but there's certainly a number of years there, probably somewhere between kind of 18 and 25, where those children are still financially dependent on you. They rely on your income to meet their kind of needs. And for those people, life insurance is definitely critical. And this is where the trade-offs lie. If you were to pass away and your family is dependent on your income, but that income is no longer there to support them, they may need to make some drastic changes that you may not want for them. Things like having to sell the house, move out of a city, really scale back on their lifestyle. Those are things that we don't like to see. And life insurance is pretty affordable to protect against those risks.
So it sounds like this is especially critical for someone where maybe just one of the adults is working and the other one maybe is a stay-at-home mom or stay-at-home dad. I mean, for that, it sounds like it's pretty much a no-brainer just because you are fully reliant on that one income. And if that was to go away, you'd obviously be in a lot of trouble. But from your research, I mean, you talk to so many Canadians about this. For people that are a dual income family, do you find as well that the majority of families, if one of them was to pass away, obviously they'd have to spend less because, one income is gone. But do you find that the reality of how much things cost in Canada, we're hearing about inflation a lot as well and how it's gone up so drastically. Do you find that a lot of families would also struggle very significantly, even if they are dual income and one of those incomes were to go away?
Yeah, it's very few families that really could survive on a single income, but still have two incomes. Typically, when people kind of plan their life, kind of set their lifestyle, buy their house, they're really doing that with both incomes in mind. And so it would be really, really difficult to maintain that lifestyle, to still pay for those mortgage payments if one of those incomes were gone. So we find that most Canadians who are in dual income families still have a period of their life where they would really benefit from life insurance.
That's such a great example you gave with the house thing, for example, where, because I've never heard of a family where they're dual income and they go to get a mortgage and you're like, oh, hold on, let's just assume we only have one income, right? That's I've never heard that happen ever, right? It's more like, all right, what do you make? What does your partner make? And then we use that to figure out how much of a mortgage you can get. And then you sort of decide, okay, how much do we get so that we're not destroying our cash flow every month because we got too big of a mortgage. But it's I've never talked to anyone that said, oh yeah, we bought our house assuming that one of us was going to get laid off one day and now we want to be relying on just one.
Yeah, so, exactly.
Hence the need for insurance in that scenario. Yeah. Can you tell us more about what the role of life insurance is when it comes to financial planning? I actually looked up so if you're a CFP, a certified financial planner, they have their site and they have kind of like their pillars of financial planning here in Canada. And one of those pillars is insurance and, risk management. So it's very much a recognized significant component, like we talk about investments a lot on the show and optimizing that and, paying less in taxes, but, those are pillars too, but insurance is an absolutely critical one as, endorsed by the actual, CFP, right? So can you talk about its role when it comes to financial planning?
Yeah. So when it comes to life insurance, this should be used as an income replacement tool in your financial plan. There are some talk of using life insurance policies for savings vehicles, and we'll get into that later, I'm sure. But largely when we're talking about life insurance, you're talking about that risk protection income replacement tool for the scenario that if you were to pass away, your loved ones would not have kind of the financial means to make their kind of monthly expenses. So strictly, that is kind of the piece of the puzzle that's where life insurance fits within a financial plan.
So is the right way to approach it not so much the way we look at investments where, okay, we're trying to maximize our wealth, trying to maximize our net worth, trying to retire. It's more so, okay, how do we do all of those things, but then also not have these catastrophic thing. If something catastrophic happens in the meantime, it's not also catastrophic completely from a financial side, like if someone was to pass away. So I guess it's kind of a bit of a different approach or mindset than when we think about investments and how to optimize that, right?
Exactly. It's exactly what you were saying. It's protecting against that kind of catastrophic risk that no one wants to think about, but still happens. And that's how life insurance works, right? It diversifies. For a lot of people, they'll never have to use the life insurance policy, but there is a subset that need it. And that's how you make life insurance more affordable, because you're kind of diversifying that risk across a big population. But yeah, that's how I think of life insurance within a financial plan.
I'm glad you mentioned that, because we talk a lot on the show about how to minimize your MERs and your investments and things like that, and how to shave off a little bit, to pay less in taxes, that kind of thing. But it's almost like all that doesn't, the amount you save on that may not even be as important. If one of your partner passed away, you can't live off one income, you can't pay the mortgage anymore. Even if you saved a few $1,000s every year because, you lower your fees, that seems almost like a really small thing relative to, well, our entire income or half of our income just is gone and we've got no way to actually replace it. So that's very interesting. So I suspect that one of the reasons that looking into life insurance isn't often near the top of Canadians' to-do lists is that it's perceived as an expense and as an additional, cash flow drain month to month. Can you give us a ballpark range of what life insurance can typically cost us in Canada, and what things can we do that we actually have control over to get the absolutely lowest rate for the coverage that we actually need?
Yeah, so that's a really good question. I agree. Most Canadians think that life insurance is much more expensive than it actually is. I actually pulled up some rates ahead of our call. When it comes to life insurance, there's kind of 4 or 5 factors that really have the biggest impact on your price. The first is kind of the coverage amount. So how much of a payout do you want if you pass away? The second is the term length. So for life insurance, this is how long you want the policy to cover you for. For most Canadians, our most common kind of policy setup is $500,000 for 20 years. So I'll stick with that for these examples, but that is on average kind of where most Canadians are buying their life insurance policy at. And then there's 2 other factors that have a really big impact. The first is your age, and the second is your smoking status. So both of those things are highly correlated with mortality, and mortality is what insurance companies use to price your policy. So if you're older and you're a smoker, unfortunately, your likelihood of needing to use this policy is a lot higher than someone who's, in their 20s and doesn't smoke. So I'll pull a couple comparisons based on whether you're kind of like a 30-year-old or a 40-year-old versus smoker or non-smoker. The easiest place to start is kind of a 30-year-old non-smoker. At that kind of setup, you're looking at $30 a month. If you're 40, it goes up a little bit to about $40 to $45 a month. So really low price point compared to kind of other things that we're buying these days, especially with inflation. And then for smoking rates, it is a bit more expensive. And this is where it gets a lot more expensive as you age. So if you're a smoker, there's huge benefits to getting it while you're young. So at 30 years old, you're looking at like $55 a month for that much insurance. At 40, you're looking more like $110 a month. So it's almost doubling in 10 years. So, for at every age, there's definitely a benefit to getting life insurance while you're younger, but specifically for smokers, that's where you see a pretty aggressive jump every year.
And now a quick break to tell you about some of the resources you may find helpful on our Build Wealth Canada site. All right, just a quick FYI that I'll be releasing some new free guides and resources in the near future on how to optimize your investments, your financial planning, as well as some optimization strategies on how we can all pay as little tax as possible here in Canada. So if you haven't already, I encourage you to go to this podcast's webpage, which is buildwealthcanada.ca. Sign up anywhere on the front page and you'll get exclusive access to all the upcoming guides for free as they get released. And upon signing up, you'll also get my guide on the top personal finance and investing tools that I use, and you'll be able to submit any topics or questions that you'd like covered in future episodes of the show. Again, to get that for free, just sign up anywhere over at buildwealthcanada.ca and enjoy the free content. And if you have any investing questions that you'd like answered one-on-one, I answer all questions from students of the investing course, where you learn everything you need to know to be a do-it-yourself passive index investor and pay the absolute lowest fees on your investments. And it actually shows you how to completely bypass the fees that robo-advisors charge, which can easily cost you tens of thousands of dollars over your investment lifetime. In the course, you see videos of me actually investing my own money so you can see how to do everything in real life, step by step. And I'm just an email away if you have any questions. These lessons helped us retire in our early 30s, and we still use them to this day. And you can learn more about the course and try it risk-free over at buildwealthcanada.ca/invest. That's buildwealthcanada.ca/invest. Also, lastly, since real estate season will soon be kicking off here in Canada, I thought I'd let you know about our free resident mortgage expert that we have available for listeners of the show who can answer your mortgage questions. Sean is the best-selling author of the book Burn Your Mortgage. He's been on CTV, Global News, CBC, The Globe and Mail, and many others. He's a licensed mortgage broker, so I definitely also encourage you to reach out to him if you're looking to get a new mortgage or if your mortgage is coming up for renewal, as at the very least, he'll be able to provide you with a short list of the best mortgages that he's been able to find across all of Canada with the lowest rates. And none of this costs you anything, and there's no obligation to get your mortgage through him or use any of those suggested mortgages. At the very least, you'll get some good education on the top mortgages available in Canada. You'll learn what to look for when choosing your next mortgage, and you can always decide later whether you'd like him to help you with the process or if you want to do it all yourself. It doesn't cost you anything regardless. So I made a special page for Build with Canada listeners where you can sign up to chat with him for free and to help you out further. When you do that, you'll also be emailed the mortgage checklist, which is a guide on the top things to look for and consider when choosing a mortgage. So the page to speak with Sean and get your mortgage questions answered for free is buildwealthcanada.ca/Sean. That's buildwealthcanada.ca/SEAN. All right, I hope you found that helpful. And now back to the show. So we're recording this in January. A lot of people maybe have New Year's resolutions and such. So one common one, I think, is people want to get their finances in order. So that's why I thought insurance would be a good topic, because it's one of those things I think that we're like, oh, we'll get to it. But then especially with COVID now and all that, it's kind of shown that, okay, this really isn't something you should keep pushing to the bottom of your to-do list. Clearly these things, things can happen. And you mentioned the smoking thing. So I guess that's another one where if you are smoking, add that one to the list. Yeah. And that will lower your rate quite drastically as well. That's good to know. Yeah. So you, like you said, if you're not a smoker, it can be somewhere like in the 30s, 40s, that kind of thing, depending on some of those variables.
Yeah. And if one thing to note is if you are a smoker, you're not like locked into this for life. If you ever stop smoking, as long as it's for a 12-month period, you'll actually be able to qualify for the non-smoking rate. So they're really looking only at your kind of tobacco usage in the last 12 months. Gotcha.
And is there any innovation around insurance happening in Canada that we should be aware of, especially when it comes to making insurance more affordable?
Yeah, so this is something that we're working on actually, something that we are very focused on. We know that life insurance is something that is not, like always a priority for Canadians, and we're really focused on making it as affordable as possible. So we have been doing a lot recently to really think about this product in kind of the life of parents. So our target demographic is parents. When we research this demographic, we think about their needs. We've added a few features to our policies that can help make this product more affordable for them. So the first is a discount for anyone who buys life insurance with their partner. So we're offering a 5% discount on your premiums, on your monthly premiums or annual premiums. It doesn't matter if you purchase life insurance with your partner. So that's a huge amount of savings for Canadians, specifically because we're already kind of the lowest price in the market by about 10%. So we're just bringing it down more for anyone who wants to apply as a joint couple. And then the second is we've recently introduced free child coverage. So this means that if anyone has children between the age of 6 months and 18 years old, we've included their children on their policies for free for $10,000 of coverage. Child riders are things that are very commonly added to people's policies at a huge cost. So this can be up to like $5 per child. So if you have 2 or 3 children, that could add to your premiums by quite a bit. We've decided to kind of include that as a free benefit on all of our policies. Stay tuned. We're constantly thinking of new ways to keep passing any savings we can think of back to our customers.
Gotcha. So, because I guess ideally you would want yourself and your partner insured, assuming, well, I imagine most people listening to this are kind of dual income situation. So having that, and so you're kind of getting that bulk, I guess, discount, so to speak, because you're insuring more than one person, and then the kids are essentially added for free. Did I understand that correctly?
Yeah.
Awesome.
Often what we found when we were doing early research is people were coming to us asking for like their family plan. And we're like, well, we don't really have a family plan right now. But that's why we decided to kind of move in that direction and build something that feels a little more encompassing and gives you the peace of mind that, okay, like everyone has it. I can feel good. There's not like, I have it. Does my spouse need it? Do they apply with me, or is it separate? Do we go with the same insurance company? It kind of relieves some of those kind of questions and just makes it really easy to apply together in one shot.
For sure. That's great. Yeah, no one wants to go through the process like, 3-4 times, once for each family member. That makes sense. So I've definitely heard of Canadians getting some really slick and persuasive sales pitches to use permanent life insurance as an investment vehicle, in addition to the life insurance coverage that it provides. And often large tax savings are mentioned as one of those, key benefits that I hear in a lot of these sort of sales pitches. Can you talk about the pros and cons of using a less expensive term life insurance policy, like what you were just talking about, to just cover our life insurance needs, versus using permanent life insurance like whole life or universal life to receive both that life insurance portion as well as an additional sort of investment vehicle? And if you could also just define sort of, term versus whole life versus universal life insurance, just for anybody that's not familiar with those 3 different terms, so we can sort of learn that way as well.
Yeah, of course. Yeah. So as you pointed out, there's kind of 2 main categories of life insurance. There's term life insurance and permanent life insurance. Term life insurance pays out benefit to your beneficiaries or your loved ones only if you die within a specific period of time. And that usually is kind of either 10 years or 20 years or 30 years, but it's in that increment. The max I've seen is kind of 35 years that you can buy term life insurance for. Then there's permanent life insurance. This means that no matter when you pass away, it doesn't mean if it's in the next 10 years or in 50 years, when you're 85, you'll get that coverage. So your beneficiaries will be paid out no matter when you pass away. It usually has an investment component built into it, typically because life insurance is so expensive for permanent insurance that if you cancel early, you could lose quite a bit of money, they actually allow you to take out some of that as a part of kind of an investment component if you decide to surrender the policy early. The two main categories of permanent life insurance is whole life insurance and universal life insurance. Whole life insurance is pretty plain vanilla policy, whereas universal life insurance allows you more flexibility in kind of what funds you want to choose to invest that investment component in. It requires a lot more maintenance, something you should be checking on kind of every year or so, versus whole life, more of like a set it, forget it. The insurance company will take care of it for you. Generally, we really believe in term life insurance for, I would say, kind of 98, 99% of Canadians. Term life insurance provides the protection you need in the years that you need it most. So when your mortgage is at its highest, when your kids are most financially dependent on you, there comes a time in most people's lives where they reach some age and they decide that whether it's their savings or a pension, they have enough income saved up that they can retire. They no longer need like an active income coming in to pay for their expenses. At that point, there's not really like an income replacement need in that person's life, right? They have already enough savings or a pension that can support them support them and their partner if they pass away. And therefore, if they were to pass away, their partner would still be fine. The savings would still exist. There's probably some spousal benefit on their pension that would still support their partner. So there's no need to pay the excessive amount of costs and premiums during those years for life insurance, because anything left over in those savings is just going to be inherited by your dependents anyway. So that's one. It really makes sense because it offers kind of the protection just in the years that you need it most, and then you don't have to pay for it once kind of those years have passed and you're feeling more financially stable. So that alludes to kind of one of the biggest reasons we encourage term. It's price. So it can be like 10 times cheaper to get term life insurance than permanent life insurance. So if you're looking at $30 a month for term, you'd be looking at kind of $230, $250, maybe up to $300 a month for the same coverage for a permanent policy. And that kind of expense just doesn't fit in the financial plan of most 30-year-olds. They have way bigger priorities like childcare and paying their mortgage and saving up for retirement, and like spending that sum of money on life insurance those years just doesn't make sense. The other nice thing about term life insurance is it offers a lot more flexibility than permanent life insurance. It can be canceled at any time. There's no cancellation fees. You lose nothing. With permanent life insurance, big administration fees that you would lose if you surrender the policy early. A lot of people who surrender in the first 3 to 5 years would get like nothing back. So even though it's kind of coined as an investment component, having an investment component that would be really, really low in the first few years of your policy. So imagine kind of paying $230 a month for 3 to 5 years, and then having some financial situation come up that says like, I can't afford this policy anymore, and not getting anything back from it when you could have just spent $30 a month on the term product. So the flexibility that term policies allow is awesome. And then generally that investment component is just not as competitive as what you could get if you just kind of invested in your RRSP or TFSA. So again, we generally just don't recommend it for especially people who are young. There is some kind of tax savings benefits, all your other kind of tax sheltered kind of vehicles that you've invested in over your lifetime, but it's a pretty complicated situation. It really only applies to like the 1%. And even then I question it sometimes because you're paying so much in commissions to a life insurance advisor, that maybe that could be like equivalent to what you just have to pay in taxes
Right.
if you were to use a permanent, and if you were not to use a permanent vehicle to transfer wealth. But there are certain scenarios where certainly it can be used as a wealth transfer in the later years, but it's not our target audience, so it's not what we recommend to our demographic.
Mm-hmm. And when you said it might be suitable for like or targeted for the 1%, are you talking the top 1% in terms of like net worth? So it's more for kind of the really wealthy people?
Yeah, it's typically people who have properties, like secondary properties, or who have a significant amount of net worth, that it can be used as kind of an efficient way to transfer wealth if you were to pass away.
Okay. So it's kind of like an estate planning sort of tactic for the high net worth individuals. Mm-hmm. And how would you define a high net worth individual? What's high these days?
Oof, that's a tough one. It probably depends on the scenario and like kind of what the assets look like. Mm-hmm. But I would say definitely probably like in $1 million plus net worth. Minimum. Yeah.
Gotcha. Sounds good. Because people have different definitions of of that. Yeah. It's a subject that, because we have a lot of investors, DIY investors that listen to the show. And I mean, that's always one thing I'm hearing pitched about whole life or universal life, about how you get these sort of tax savings and how that's such a great thing. But then I'm thinking, well, hold on, because it's all opportunity cost, and you only have so much money you can invest. So It's like, all right, so if I'm paying more for the policy now because I chose to get, let's say, universal life or whole life, then that's money I'm not putting into like, total market ETFs in my RSP TFSA taxable account. Mm-hmm. Okay, so what am I getting in return for that? Because I know those other methods are very inexpensive, very efficient, very good history of growth. And so, okay, I'm giving that up. What am I getting back? And I've never really heard a compelling enough case to sort of, you know what I mean? Like, you're giving it to an insurance company, you're definitely going to be paying more in terms of fees than like what those bare bones MER costs are on like a total market index fund. So, so I always like to ask whenever I have someone on, it's sort of in the insurance field, it's like, what is the benefit? Can you sell me on it? Because I haven't heard a good enough sales pitch where I'm like, oh, I'd actually consider this. Because I mean, anything, even if it's an okay solution, it has to beat the next best, the competitor, which is just low cost, ETF index investing in like tax sheltered accounts. That's pretty hard to beat when you're now dealing with like managed products, right? Because those tend to have higher fees anyway, right?
Yeah, you would definitely want to see those like completely maxed out before you even ever consider saving within a life insurance vehicle.
Gotcha. Okay.
So that would be, maybe at that point there'd be some merit to it, but even then it's a lot of fees. So it's
very interesting.
It's quite an expensive way to save.
So just so we don't waste people's time, I guess, would it be more fair to say, okay, let's say you've got your RSP maxed out, you and your spouses, your TFSAs are maxed out. Maybe you've got some money now in taxable accounts because you can't put them into tax sheltered accounts anymore. So your net, if you're at that point, your net worth's probably getting pretty up there. Maybe you're like at $1 million plus, like investable assets. Would you say maybe at that point you're kind of like, okay, fine. If we really want to look into it, maybe now it's but even then it's not a given because again, of that opportunity cost.
And you just want to be sure that you won't need that money before you pass away, again, because the flexibility with pulling that out is very difficult. You don't actually just get to take the money out. You actually take a loan against the life insurance policy. So it gets very complicated. You want to trust the person who's giving you advice on these products if you are looking into them.
Gotcha. So you're saying that's a great point. I haven't heard that before. So you basically want to make sure you've got a really big surplus in addition to that, because it's like, I'm in the ETF world, right? So it's not like you can just in ETF, and correct me if I'm wrong, it's not like you can just, something happens, you have some medical emergency or whatever, and you can just pretty much liquidate some of your ETFs on any, Monday to Friday, and you've got the cash. You might take a few days to transfer to your checking account, but I mean, it's extremely liquid. And you're saying with this, especially early on, you could pretty much lose all of it if you take it out too early. And even if you have had it for a while, it sounds like it's a whole process, and it's nowhere nearly as liquid as doing something like ETFs in a TFSA or a taxable account. Am I understanding that correctly?
Yeah. And there's just a lot of, you got to really read the policy contract to understand all the terms and conditions against kind of taking a loan against it. So it just gets pretty complicated. Yeah. It has its uses sometimes, but you want to make sure you are going in with your eyes wide open and understand kind of what would happen in any of those scenarios.
Awesome. That was great. Thanks so much for for that information. Yeah, because I'm always looking for, what's the real reason? Because you guys don't even sell, I think, whole life, right?
No.
So it's good to know for someone that's in the insurance field, like this is your specialty, and you can sell the product, so I can actually get like a true, kind of impression of it.
And our commissions on that would be incredibly high, but we choose not to sell it because we just don't believe it. We think it's oversold to a lot of people who don't actually need those policies in Canada. Yeah.
I mean, the sales pitches that I've seen and heard people talk, like they're pretty slick, and I guess it's because they're highly refined because they're so profitable for the agent selling it, right? So that makes sense. Okay, awesome. So we'll move on from this one, but thanks for telling me about that, because that's been always on my mind whenever I talk to someone in the insurance field. So now, with COVID being the big elephant in the room, I'm sure there's many Canadians are wondering whether COVID has impacted their life insurance in any way. And if they are in the process of getting life insurance, will they still receive the payout if the insured person and their family passes away due to COVID? So how can we best ensure that we are covered if we get life insurance now? And for those that already have life insurance, what's the best way to check that we're still covered?
Yeah. So life insurance policies have very little fine print on them, even though the policy contracts can be very long. But with almost every policy I've seen, I'm obviously not going to say for every single policy, but any policy I've seen at least, the life insurance payout covers all causes of death. So the only exception, and this is just across the industry on every policy, is suicide within the first 2 years of the policy. But other than that, whether it's health related, accident related, as long as you're getting kind of fully underwritten term or permanent life insurance, any cause of death is covered. So you don't have to worry about COVID. No insurance company has added an exclusion about kind of even for new policies about COVID being or kind of complications as a result of COVID being excluded from the policy. So you can rest assured that your existing policy as well as any future policies are going to cover a death related to COVID. And so it's definitely something that you don't have to worry about. It's been covered. They've paid out claims due to this. It's not something that they've decided to exclude from their policies or anything.
Gotcha. I suppose as a best practice, it's still good to ask when you're getting a policy, or if you already have one, to say, hey, just to confirm, getting kind of an email, getting it in writing, we are covered in case something happens due to COVID, that kind of a thing. But you're saying we should I guess we can do that, but it's not like insurance companies many have decided, you know what, this is too risky for us. We're just going to have a clause. Because that's my main fear, right? Is, okay, what if there's some clause on page 37 in letter 4 font that says, anything COVID is excluded kind of thing, right? That's at least for me. Maybe I'm just paranoid, but that's the one thing that always gets me. No, I know.
That's definitely the reputation that kind of the insurance industry has. But no, it's not something that I have seen any insurance company in Canada exclude from their policies.
Okay. And you mentioned a 2-year time frame. What was that about?
Oh, sorry. So the only exception, the only cause of death that isn't excluded is suicide within the first 2 years. So that is just kind of an anti-selection risk that the insurance companies remove. It's across the industry. It's in every policy I've seen, even in the US and other countries. It's a pretty standard exclusion.
Okay. Just so that someone doesn't take out a policy right before they do that, and then we're in financial trouble, so I'm just going to do that to myself, and then so my family. Gotcha. Just want to. That sounds good. Now, for anybody listening that does not currently have life insurance, how can we best determine if we actually need it for a particular situation? You covered this a bit with the whole family piece, but is there anything else you wanted to add to that one?
Yeah. So, I mean, the best way is kind of to ask yourself, if I were to pass away, say, would there be anyone who would have a financial hardship as a result of my death? So that could be any loved one, whether it be a partner or children, or even kind of anyone who is dependent on your finances. For some people, that could be kind of aging parents even, or family abroad. So if you think, oh, they would definitely kind of have to undergo a financial hardship if my income weren't there to support them anymore, and I don't want to see that happen, kind of that's where you may start considering kind of getting a life insurance policy. If you're really struggling, we have an advice calculator on our website that helps you determine whether or not you need life insurance. But typically just kind of asking yourself that question susses out the right kind of frame of mind when it comes to life insurance.
Okay, awesome. Can you tell us the site and where we can go to try the calculator out?
Yeah, sure. So if you go to www.PolicyMe, PolicyMe.com, and click get a quote, and then on that quote page, you're able to click get advice. If you're not sure, we have a kind of toggle that lets you pick how much coverage you need. But if you're not sure, we have a calculator that lets you kind of put in a bunch of details about your financial situation, about your kind of family composition, and we give you advice on what coverage amount and term length makes sense for you.
Gotcha. And one thing I was curious about too is I remember when we spoke, I think it was a few years ago now, you guys had sort of a different approach where you were providing insurance from lots of different providers, but now you've actually, and correct me if I'm wrong, you've actually become an insurance provider yourself. Can you talk about that? Why did you do the switch? And yeah, just to maybe let us know for anybody hearing about it for the first time.
Yeah, of course. This is something that we launched in 2021. Was something that was on our mind since we started the company. We had originally launched the company as a brokerage business, meaning, to your point, we would sell kind of Manulife products and BMOS products. And although we could offer a fairly slick experience to just apply, once you got into the underwriting stage of the policy, we lost a lot of control over the customer experience. We found that insurance companies were extremely slow to get our customers' decisions. This could take months to get someone kind of an answer on whether they're eligible for life insurance or not. And we just thought, in this day and age, that makes no sense. So we quickly started working with the help of an insurance partner called Canadian Premier and a reinsurance partner to develop our own product that's totally customized to kind of the PolicyMe audience. And the biggest win was kind of developing an automated underwriting algorithm. So we are able to, I think it's up to kind of 65-70% of people, we're able to give them an instant decision on their life insurance eligibility. So if you come in, you can apply online, answer all your health related and kind of financial related questions. And we will then tell you within kind of a few seconds of finishing those questions whether or not you're approved for life insurance. So end-to-end process can take kind of 20 minutes. We also give you the option to have an e-commerce-like experience for checking out for your policy. So once you get approved, you can sign your policy contract, add your beneficiaries, pay with credit card, and kind of verify your ID all in one shot online. Typically, the policy contract delivery process before COVID was all paper. Now they have some e-delivery options, but paying for it is still super manual. You have to give an insurance company kind of your bank account details. It takes up to like a week to even set up that policy once you're approved. So you can do that all online in a few minutes. So we've seen some customers kind of get on our website and have their life insurance coverage in place, in effect, in 20 minutes. And so that's something we wanted to deliver to the Canadian audience. And that's why we kind of developed our own product to do that.
That's awesome. I'm glad you guys did that. Yeah, my memories of insurance years ago was that it's like a week-long process to get it set up. So you dread it because you're busy. It's, we have kids, and it's like, okay, I don't want to. And so it makes it even easier to be number 87 on the to-do list. because, oh, this is a week-long thing and it's not fun and it's like administrative stuff. So that's really neat. So that's great. Yeah, I was curious because there's already so many insurance providers out there. I thought, okay, clearly you must have seen some sort of gap or some need that wasn't being met in order to want to do this, right? You don't want to just be like, oh, why we do the same thing that these other 13 providers do or whatever.
Yeah.
So that's great. Thanks for sharing that.
And then the other thing we have been doing, we've been focusing really on simplifying the product and making it less complicated. So we just found, to your point, it's just overwhelming to even start because you're like, this is just too complicated. I need someone to kind of walk me through this. And every step in the design of this new customer journey has been with this mindset of how do we make it less complicated. So with the policy contract, for example, we've brought it from like a 90-page contract to a 12-page contract, all in size 12 font. We encourage everyone to read every word. It doesn't take too long, just so you can feel really confident at the end of the process, like, oh, I understand what I bought. And I kind of was able to get through the whole policy contract. I know what the details are. I know if there's any fine print, which there isn't. And so that's kind of what we strive for and something that we're continuously working on to improve.
Awesome. Now, whether we're shopping around for a policy or already have one, what kind of analysis can we do ourselves to evaluate the quality of an insurance policy?
Yeah. So what I'd say is if you can, I'd ask for a sample policy contract before you start. This is something we make available to everyone on kind of our quotes page. So within the first few pages of getting on our website, you can pull up that sample policy contract, read it through front to back and make sure you're confident with what you're buying. If that's not accessible to you, I would just find someone you trust in the industry to help you compare the products. They're largely very similar, but it is still good to double check. And then when it comes to price, there's a lot of places on the internet where you can compare product pricing. So like the rate hubs of the world are a good place to then make sure that you're getting like the best price on your life insurance policy.
Awesome. Now, personally, I've always felt a bit skeptical when asking somebody that sells insurance, how much insurance coverage do I need? And I kind of think of it like asking a real estate agent how big of a house I need when their commission is obviously higher the bigger the house I purchase. So with insurance, I find it often a similar story where the insurance expert that you are speaking to is maybe compensated more depending on how large the policy is that I buy. So there's an incentive for them to really paint a story of why you need as much insurance as possible. So for people like myself that have this concern, how can we best determine how much insurance we actually need without having to take advice from someone that is potentially financially incentivized to sell us as large of a policy as possible?
Yeah, that's a really realistic concern. The incentives in the industry are such that the person selling you the policy is 100% incentivized to sell you something bigger or more complicated because that typically leads to a bigger commission for them. There are rules of thumb that exist, like 10 times income, but generally, I don't really like these rules of thumb because they're very conservative. They're going to tell you to buy way more insurance than you need. The reason for this is they don't take into account any savings that you have or your partner's income to offset kind of some of the expenses that you may have if you were to pass away. So we've actually built a sophisticated calculator at PolicyMe.com that you can go to check how much life insurance you need. We're very proud of the fact that we actually tell 26% of people that they don't need life insurance. So either they don't have any financial dependence or their savings and partner's income are enough such that we believe that their family would be able to maintain their lifestyle if they were to pass away. So definitely would recommend you check that out. As a last alternative, like again, it's just finding someone you trust in the industry. Maybe it's a fee-based advisor, I'm not sure, but someone that you think that would give you kind of pretty honest advice without being deterred by those incentives.
Gotcha. And then with the people that work at your company, are they incentivized? Like, do they get bonuses and things like that for selling policies or no?
No, so everyone you call at PolicyMe is a licensed advisor and they're non-commissioned. So they're salaried employees. They have no incentive to ask you to purchase a policy that's bigger than something you'd ever need.
That's awesome. That's great. Yeah, I really like. Yeah, it kind of removes one potential conflict of interest, right? In terms of So that's great. Thanks for sharing that. Can you tell us more about where we can get more of your educational resources, and what is a good next step for someone that thinks life insurance is something that should be on the radar, but either doesn't have any life insurance or maybe is not sure if they have enough through their employer? Like, I know a lot of employers offer insurance, but at least from all the research and people I've talked to, it's usually not enough. And so people kind of like, check that box, like, oh yeah, I've got insurance. I get it through my work. I saw it in my offer letter. And then like when you actually dive in, it's like, oh, this is nowhere near enough for what you actually need. So can you talk about that maybe a little bit more?
Yeah, so I guess this is an opportunity to definitely pitch kind of our content that we create. We spend a lot of time building really strong and quality content for Canadians on the topics of life insurance. So if you just go to policyme.com/blog or click on our homepage and go to learn and click blog, that's where you'll be able to find a lot of articles about kind of life insurance for parents, life insurance through your work. Is it enough? Kind of all those topics that you alluded to, and just kind of spend some time reading up. If you still have some questions, you can call in. Our phone number is kind of prominently all over our website. So feel free to call in from the hours of kind of 9 to 5 any day, and you'll get a licensed advisor who can walk you through some of your questions that you have as well.
Awesome. That's great, Laura. Well, thanks so much for coming on. It's nice to talk to someone. Yeah, with this space in Canada, and not just insurance, but like investments, right? There's so much potential conflict of interest and things like that. Yeah. So it's really nice to sort of talk about that and say, okay, can we actually get to the core instead of someone telling you this really refined sales pitch story because, they're getting commission from it. So they've obviously been refining it forever and that kind of thing. Yeah. So it's really refreshing to hear from yourself and your company where the people working there are not incentivized to sell you as big of a policy as possible. And the number you gave, the 24%, was it, that you actually say you don't need insurance? I imagine that must be incredibly rare in the insurance industry when most people are compensated to sell you as big of a policy as possible, right?
Yeah. It's something we're very proud of.
That's awesome.
Yeah, no, thanks so much for having me. It's been a pleasure. I love coming on this show.
Awesome. Thanks so much. It's been a lot of fun, just like last time. And it's great to see that you guys actually have your own product now and you kind of can control that and make sure that it's actually fast and efficient and you've got total control over the quality of the entire process to make sure everyone's happy with everything. So it's great for, I think, Canadians to know that and to get this on the radar, especially, with New Year coming and COVID spiking again. It's definitely, I think, one of those things where, okay, we want to optimize. When optimizing finances, insurance is definitely, like I said, one of the key pillars of financial planning. And so I'm really happy to have an expert like yourself on to sort of share these best practices when it comes to that. So thanks so much for coming on, Laura. This is fun as always.
Yeah, so much fun. Thanks so much.
All right, awesome. Thanks, Laura. Bye. All right, a big thanks to Laura from PolicyMe for coming on the show. Definitely check out the free insurance tool that they built to see if you actually need life insurance and how much you should get. The link for that is over at buildwealthcanada.ca/PolicyMe, all one word, and just click anywhere on the Get Started button. That's not an affiliate link or anything like that. Also, don't forget to sign up to this episode's newsletter anywhere over at buildwealthcanada.ca, as there are some new investing and tax optimization guides getting released for free this year, and you can get them all as they get released by being a part of the newsletter over at buildwealthcanada.ca. Also, that link again to get your new mortgage and mortgage renewal questions answered for free and get Sean's up-to-date list on the top mortgages in Canada from the 60-plus lenders that he monitors is available for free at buildwealthcanada.ca/Sean, SEAN. And if you're looking to get started in investing or are looking to optimize your investments and are tired of paying high fees to your robo-advisor or your mutual fund provider, then definitely check out my step-by-step investing course where I show you everything you need to know to be a do-it-yourself investor so that you can pay the absolute lowest fees on your investments. And this can easily save you tens of thousands of dollars in unnecessary fees over your investment lifetime. So to learn more and try the course risk-free, you can go to buildwealthcanada.ca/invest. That's buildwealthcanada.ca/invest. And in there, I also answer questions one-on-one if you have any questions while going through the course or about investments in general. All right. I hope you enjoyed it. Have a wonderful week. Thanks for tuning in. Stay safe. And I hope to see you next time. Take care.
Thanks for listening to the Build Wealth Canada podcast at www.buildwealthcanada.ca.